Welcome to Markets Now. I'm Michelle Rook with Tomm Pfitzenmaier with Summit Commodity Brokerage. An update and everything but the corn market. And boy, after the bloodbath we've seen the last couple of sessions, Tom, it was nice to see kind of some corrective buying across most of the complex, wasn't it?
Yeah, well, wheat had a good day. Soybeans, in spite of the fact that meal was actually down a fair amount today, but the soy complex was supported by the bean oil market, which we've been waiting for quite a while for that to get some traction underneath it. And you saw some recovery buying in the cattle market, which I think pulled hogs long. So, and you had for the front month of the feeders was up the limit. So yeah, a lot of good things happened today, and hopefully we can get some follow through on it.
Yeah, let's hope so. The one exception was the corn market, which scored new contract lows in I think March and May, and we actually hit 3-year lows in the spot month. And so talk about why corn could not follow, especially the big rally in soybeans and wheat.
Well, there's two things. What the primary one is the fact that we've got a carryout of 2.1 billion bushel plus, and it's really hard to get anything going with that large a carryout in corn. Number two is you've got this situation in the December contract where you got first notice day coming up on Thursday, so people are getting out of their long positions on the December contract to try to avoid delivery. Or to avoid delivery. So you got that sort of unique circumstance in the corn market, but corn doesn't have a very good story. I mean, ethanol demand's quite good, production numbers are strong, but we just are having trouble selling corn on the export market, in spite of the fact that U.S. Gulf corn's the cheapest corn in the world. So until we can get something going there, and I suppose that there are those that believe that the corn crop wasn't as big as the USDA has been saying. So I suppose that's potentially sitting out there, although unlikely that they're going to change that all that much.
Yeah. Okay. So technically, where do we hold here as far as support, though, in the corn?
Oh, I think 450. It was a little bit negative that the low on the September contract before it went off the board was 455. We kind of took that out here in the last day or so on the December contract, but it looks like 450 is going to be fairly good support. The problem is if you look at and a lot of people want to roll those long positions into March. The problem when you have big carrying charge markets like this, big carryouts, each successive month tends to come down and go off the board where the previous month was. So with March trading 20 cents above the December, you have to wonder if there isn't maybe 20 cents down in the March contract before it goes off the board. But corn has gotten oversold, needs an upward bounce, and you could certainly see that for 10, 15, 12 cents, something like that, without too much trouble.
Yeah. So we get first notice day out of the way in this liquidation in the corn. The funds are really short in that market, as you mentioned. They're short in wheat. What's the catalyst? Is there enough seasonally to get them to start covering those short positions?
Well, to some extent, it's going to depend on South American weather. We're watching that very closely. There's a lot of talk about the delayed planting on the soybean crop, particularly in Brazil. And that their primary corn production is the safrinha crop, which is planted after the soybeans are harvested. Well, if you keep pushing that soybean planting date back, then it tightens up their window for being able to plant safrinha. So that's really the thing that I think could give us some strength in this corn market. But they don't plant that till February or March, so we got a ways to go before we really see how that shapes up.
And as I mentioned, wheat scoring some new contract lows and the funds are short there. And wheat has to quit going down before corn can quit going down, I would assume. So the wheat market, can we build on what we saw today in terms of this rally?
I think we can. I think it'll probably be led by the Kansas City market that had a huge premium to the Chicago, and that's really tightened up. So I think that will be one to watch pretty closely. And the wheat market's really getting drug around a lot by whatever happens in Russia, whether it be the Russian wheat crop size, whether the ability to export through their ports. So a lot of what happens in our wheat market is dependent on that, and that's what we're keying off of a fair amount. So, yeah, with Russian wheat in fairly abundant supplies, it's going to be you're going to have corrective bounces in wheat, no doubt. But I don't think they're going to go all that far. And then you've got the anchor of the corn market having not much ability to go up, which doesn't help the wheat market either.
True, they kind of feed off of each other. So the
Right.
soybean market, you mentioned that we're still holding South American weather premium there, Brazilian weather premium. How much weather premium do you think we need in that market right now?
Well, if these dry areas stay dry and the wet areas stay wet, we may have to take the soybean market back up toward $14. Now, to some extent, part of the problem is, that soybean market's been led by meal. The meal market's been strong because of the Argentine crop. Well, last year, but the farmers are getting their crop planted. They've got this new administration that may be beneficial to the farmers in Argentina. So you wonder if the meal can really go all that much farther, especially if the Argentine crop gets planted and off to a good start. Now, if you go back to soybeans themselves, that's obviously dependent upon Brazil. Most of the 75 to 80% of the crop is planted. Rio Grande do Sul is way behind, and that's the area that we're watching quite closely. But there's some speculation that the crop loss, whatever that may be in Brazil, could be offset by a better than average crop in Argentina. So maybe we can go up and challenge 14. I think we'll have a tough time going beyond that, however.
And cattle had a huge up day, corrective buying there, but do you think we're trying to forge a low here, and are the funds done liquidating?
Well, I don't know if they're completely done, but they've liquidated most of their long positions. So we've really cleaned up that side of the cattle market. The cash market is hanging there quite well all the way through this. If you are a hedger, it's worked out great because the futures have been much weaker than the cash market. So I don't know. I think the numbers are still going to be favorable for cattle going into the winter. Demand continues to show up quite well for pork and beef at the retail level. So I think that part's supportive. So I guess I don't know that we're going to go back and make new highs, but we certainly could see the cattle market work back up into the middle of its training range. And feeders had a heck of a day.
Yeah.
They were up the limit today. So you got to be a little bit optimistic about that as well.
Yeah, and it was definitely impressive considering we had some 175 cash trade in the South, which was some lower money. Hog market, we've stabilized there, but how much upside potential do you think we have in that market?
Oh, there's maybe $4 or $5 up, and maybe it gets drugged along again by the beef market. Again, export demand is okay, but retail demand for pork's really quite good. So I guess I'm expecting to see a $4 or $5 bounce in hogs, but I think going beyond that's going to be pretty tough.
Yeah, no doubt. All right. Thanks for joining us as always, Tomm Pfitzenmaier, Summit Commodity Brokerage. That is Markets Now.